I don't think that will be the solution for the both. DWS and UBS are still small players. Well, you could argue merging would help them to grow into a position that could help to fight the margin erosion. But in the end, I think they still be too small to survive.
And especially because they would be facing increasing competition from the big US players like BlackRock and Vanguard. So would they possibly go under with this competition?
Absolutely, they are trailing the two big US players. They wouldn't go under, but the question is, do they have a purpose? Do they serve client needs? And so far, I would be skeptical about their innovative power. And so merging could be a solution, but I have my doubts.
And the biggest doubt, what is it? Is it scalability or innovation if you merge the two asset management businesses?
Well, let's start with UBS. The Swiss have never been a powerhouse in asset management.
But they have been trying to.
Yeah, they have been trying. But they've benefited from their wealth management clients. They've been basically captive. I have my doubts that an asset management unit that has its clients already can be really innovative. Then they're pretty small, so they need to scale, but they've been slow in embracing digitization as well. And so I think for UBS, the question would be more, do I need the asset management unit to be a successful player, because they want to be a wealth management powerhouse, not an asset management powerhouse.
So what will this mean now for the future?
I think they should really address the question, shall we have our own asset management capabilities?
They are unlikely to do that.
They are unlikely to do that because they don't want to do that. They might be afraid of having too many people to be laid off. I don't know, a political question. But in the end, for a powerhouse like UBS in wealth management, you have to ask your question, do I need these capabilities, or shall I just buy the best products that are in the market? And I think they should do that.
So what about the Swiss asset management industry in general? I mean, they face so much competition, right? Is it time to pack up and leave that business?
No, it's not time to pack up. There are some smaller asset managers that have their unique position, but the large ones that are selling index-hugging products or ETFs, they should really question themselves, shall I be in the market or not? The bigger players like BlackRock, they are just too big, too efficient, and too good to actually bite into their market share. So either you become a very small, unique niche market player or go for scale. And both options are basically out of question.
Not on the table right now.
No.
Well, if we look at some hard numbers in terms of ETF issuers, BlackRock, for example, has a market cap of some 1.3 trillion US dollars. Vanguard some 680 trillion US dollars. So there is no way that the Swiss could compete, European players could compete. So basically, the big fish will eat the small.
Yeah, you can call it like that. I think the cards have been played out. I think that what they have to think about is to give it up. It's nothing bad about it. You don't have to own a business where you don't have an edge. Focus on where you are strong. And I think asset management has never been something the Swiss have been very strong.
And another factor to bring into the conversation is basically that margins are shrinking.
Absolutely.
So this will beef up competition even more.
Yeah. If you are small, you need to be a unique niche player. If you want to compete with the big powerhouses, then you need to scale. And the Swiss and the Germans cannot scale. Even if they merge, they will be close to Amundi, the leading player in Europe, but still be too small to be a global player. And I think with the erosion of margins and the fact that in the US you can even have ETFs at zero cost, how can you play and compete against these players?
So,
you can't.
Adriano, will this erosion of margins also lead to more industry-wide consolidation in that case?
Absolutely.
And in which markets specifically? In the US and US, companies buying up the European ones?
Yeah, the question is, I see two trends. One is the passive ETF trends, and that trend will grow. You can't stop that. And you will see a lot of smaller active asset managers. So in the middle players, and I would see DWS and UBS and even Credit Suisse in that space will have to go either niche or to grow, but both options are not really realistic. So I think the Swiss asset management industry will, in a way, shrink.
The Swiss asset management industry will shrink, not a very good outlook for sure. So you're not at all optimistic that they will weather the storm?
No, I'm not optimistic, but the question is, what is the strength of the Swiss financial markets? And
so that's where could they gain strength?
I think the Swiss should focus on wealth management and not own the product factory. You can choose and buy the best products you want for the benefit of your clients. That's the place to be. That's where the Swiss have to invest energy and forget about the product factory. We will never be big enough and innovative enough and digitized enough to compete with the US.
Let's hope they will be able to catch up, isn't it? Now, digital disruption is obviously disrupting all industries, including the media business as well. But what about the passive versus active investments? Is it good for passive investments or for active investments, this digital disruption?
I think that both can benefit. Obviously, indexing lends itself perfectly to digitization, and the robo-advisor industry in the US and even in Switzerland have shown.
And you're in this business as well.
I'm in that business,
You are a digital wealth manager, and you have robo-advisors as well. So you're also playing this game. I'm
playing this game, but the difference is that we also use model portfolios run by active asset managers. I don't want to say passive is better than active. The question is, do active investors have an edge? Are they rule-based? Can they scale? Do they have an edge? If not, then give it up and leave the business to the passive industry. I think both have their strengths. The clients need to know what they're looking for, but digitization definitely benefits the passive industry.
But even as a wealth manager using robo-advisors, right, you should be scared of being eaten up by the big fish because there are many, many big players out there in the market.
There's always a question. Yeah, we are small, but digitization allows you to actually reduce costs to become competitive, which has not been the case before. So digitization actually helps the smaller fishes, and still not every big fish wants to eat a small one. I think there's enough room and space for both players.
So before we go, basically, for the wealth management business, also, what kind of future are you seeing here in Switzerland?
The wealth management industry, I'm very optimistic because we have the DNA of wealth management. We know how to deal with global clients. We know what their needs are. And just to give you an example, the payment system in Switzerland works for all different currencies, something that in the US or in other European countries isn't the case. So I'm very optimistic for the Swiss wealth management business, less so for the wealth management, less so for the asset management.